As an employee who was tax compliant under the old tax law, you should expect to pay less personal income tax under the new Nigeria Tax Act. However, if you're an employee who never paid PIT under the old tax law, then you have some work to do. Hi, I'm Jadisola Akingbola. I share practical financial advice to help you manage your money with intention and clarity. Tax is generally withheld at source for employees, a system called pay-as-you-earn, PAYE, whereby employers compute PIT, personal income tax, withhold it from the gross salary of employees, and remit it to the relevant state tax authority on their behalf. So this type of employee should expect to pay less personal income tax on the same salary under the new Nigeria tax law. This is because of the revised tax brackets and rates, which allow the first 800,000 naira of your taxable income to be tax exempt. Please check out my video on personal income tax for more information on that. This means that you have more of your income at your disposal. What you need to do is ensure that your employer has all relevant details to exercise the reliefs accessible to you and remit PIT on your behalf. Before 31st March of the next year, you will need to file your annual returns with your state tax office. This is so that your tax authority can compare the amount of personal income tax you have paid with your total taxable income. So if you have other sources of income, maybe you run a side business or you have freelancing jobs that you do, you will need to compute your personal income tax and remit to your state tax office before 31st March of the next year. It is important to note that if you have fully utilized your reliefs under your paid employment, you may not be able to exercise those reliefs on your other sources of income. So this is what I mean. Let's say you pay rent and you choose to exercise your rent relief allowance of, let's say, 500,000 naira. If you exercise that relief of 500,000 naira under your paid employment, you cannot take that same amount and exercise it again on your other sources of income. The concept of the rent relief allowance is on your total annual taxable income as an individual, not just on one source of income, but your total annual taxable income. However, for employees whose employers don't withhold personal income tax and remit on your behalf, you will need to file your personal income tax yourself to your state tax office. Employees in this category could be salary earners under unregistered businesses or even interns. Interns receive stipends, and some organizations do not compute PIT and remit for interns. So if you're an intern under this category and your income falls above, the tax exempt threshold, you will be liable to pay personal income tax, and thus you will have to compute it yourself if your employer is not already doing that for you. You also will need to compute personal income tax on other sources of income if you have them, and file your annual returns to your state tax office before 31st March of the next year. Also, benefits in kind are now taxable under the new Nigeria tax law. If you receive benefits in kind from your employer, such as official house, official car, and so on, the law says that you have earned as income 5% of the amount used to purchase that asset by your employer. Or in the case where your employer rents what is given to you, the annual rent paid by your employer is what the law sees as income earned by you, and thus PIT will be charged. To know how to calculate your personal income tax, please refer to my video on PIT, or you can click on the link in the description to download the template. You don't need to be anxious about how to go about paying your personal income tax. A way to avoid that anxiety is to ensure that you have proper documentation for all you receive and spend. And no, I'm not talking about bank transfer narrations. What I mean is, for example, you pay rent. You should be able to have a rental agreement, a rent receipt, a rent document that shows the exact amount of rent you are paying. The amount written on your rental agreement or rent receipt should tally with what exits your bank account and what is in your bank statement at the end of the year. Also, the rent address on your receipt should be able to match the address in your employer's database. You can't tell your employer you live in Ojodu and your employer has your house address as Ojodu and then bring a rent receipt that shows an address of, say, Lekki Phase 1. What is on your rent receipt should actually agree with the house address your employer has in their database so that you can exercise your rent relief allowance. Another example of proper documentation could be your employment contract, that details the amount you receive as salary so that it proves the amount that comes into your bank account on a monthly basis. Now that you know how personal income tax works, you should be more confident on what to expect at the end of the year. Thanks for watching. Remember to like, share with anyone you know who needs this, and most importantly, subscribe so that you won't miss new videos I share on this channel. Also, feel free to drop your questions and comments in the comment section, and I'll be happy to respond to you. See you in my next video.